When people talk about autonomous driving, they usually picture flashy cars, bold promises, and big headlines. But real progress in autonomy doesn't happen on stage. It happens quietly, through small technical decisions that almost no one talks about. And today, we're looking at a company that rarely makes noise, but already sits inside 170 million vehicles worldwide. You may not see its logo on the car. You may not hear its name in press conferences, but its technology is already on the road. I am Emily Carter, and this is the story of Mobileye. Here's something most people don't like to hear. Fully autonomous driving isn't about one big breakthrough. It's not a single moment where everything suddenly works. It's built step by step, through trust. Trust from regulators, trust from car makers, and trust earned through real-world data collected year after year. Regulators don't approve ideas, they approve track records. And this company has been building that track record for more than 20 years, working quietly with automakers all around the world. It doesn't try to jump straight to the finish line. It focuses on getting every step right along the way. So what does this company actually do? At its core, it focuses on three things. First, vision-based driving systems, software that helps cars see and understand their surroundings. Second, custom AI chips, known as IQ, designed specifically for safety-critical driving tasks. And third, mapping and driving policy software that helps vehicles decide how to react, not just what they see. Today, these systems are already integrated into vehicles from more than 50 global automakers, and that's an important distinction. While some companies try to build everything themselves, this one aims to become the default supplier, the quiet layer that works across brands. Same destination, very different strategy. This is where things get interesting. Mobileye isn't chasing headlines, it's already deployed. Every year, its technology ships in tens of millions of vehicles, helping drivers stay in their lanes, avoid collisions, and react faster. In 2023, the company generated roughly $2 billion in revenue, and most of that came from advanced driver assistance systems, not from futuristic robotaxis. That matters, because it means long-term contracts, deep integration with automakers, and platforms that stay on the road for 5 to 7 years at a time. This isn't a moonshot story, it's infrastructure. And infrastructure scales quietly. Now let's talk about safety, because this is where autonomy either earns trust or loses it. Mobileye's philosophy is simple. No single sensor should ever be trusted on its own. Instead, their systems combine cameras, radar, and LiDAR, all cross-checking each other in real time. That may sound conservative, but in safety-critical systems, conservative is a feature, not a flaw. Regulators don't think in terms of excitement, they think in terms of probabilities. And when you're designing systems that operate at highway speeds, acceptable failure rates approach 1 in 1 billion hours. That's why redundancy isn't optional. It's mathematical, and it's one of the reasons this approach fits so well with how autonomy is actually approved. Now here's the part most investors completely overlook. Technologies that can see clearly, understand complex environments, and make split-second decisions don't stop being useful outside civilian cars. The same core capabilities show up in logistics, security, infrastructure monitoring, and defense-related applications. Mobileye's mapping and perception systems already process millions of kilometers of real-world driving data every single day. That scale creates something markets rarely price correctly: optionality, not revenue that shows up in guidance, not contracts announced in press releases, but technology that becomes more valuable when safety, autonomy, and reliability suddenly matter more than speed. That's the hidden option. Now let's ground this story in reality. Mobileye is not a hyper-growth stock right now, and it's not trying to be. In recent years, the company has operated with gross margins around 65%, which is strong for the automotive supply chain. At the same time, it continues to invest heavily in R&D, because in this industry, falling behind technologically is far more expensive than short-term margin pressure. Growth slowed as automakers worked through excess inventory and delayed new model launches. But nothing about the long-term demand disappeared. This isn't a story about acceleration, it's a story about durability. And in automotive technology, durability often matters more than speed. Of course, this story isn't without risks. Automakers are under constant cost pressure, and that always flows downstream to suppliers. There's also the pace of autonomy itself. Higher levels of autonomy are coming, but they're coming slower than many early forecasts suggested. And some carmakers are experimenting with building more technology in-house, which could limit supplier pricing power over time. The key thing to remember is this: automotive adoption doesn't move in quarters. It moves in years. If you're looking for fast reactions, this isn't the right stock. If you're looking for slow, steady adoption in a regulated world, the risk profile starts to look very different. So here's how I think about this. If some companies in autonomy are trying to prove what's possible, this one is focused on what's acceptable. It trades excitement for approval, speed for trust. And in industries shaped by regulation and safety, trust tends to compound faster than ambition. You won't see sudden spikes driven by headlines here, but you might see something more durable: technology that quietly becomes standard. Mobileye is a reminder that in transformative technologies, the biggest winners aren't always the loudest. Sometimes they're the ones shipping quietly, integrating deeply, and building trust one vehicle at a time. If you're interested in long-term stories at the intersection of technology, regulation, and real-world adoption, make sure to subscribe. This is Emily Carter, and I'll see you in the next story.